Greetings, market rebels. Welcome to this week's macro measure. It's Friday, actually, April 5th, but since we always put these out on Sunday, we're going to stick with that convention. Anyway, this is macro measure. I'm Wayne, and it's probably about quarter after 3 here on the East Coast on Friday the 5th, as I noted. And I've got my weekend that's just chock full of stuff. So I'm trying to take care of this so that we get something out to everyone on Sunday. Here's our trusty disclaimer. Here's our trusty intellectual property rights notice. And here is our theme, which we've been sticking with, which is point counterpoint, because there's a lot to like in the charts, but there's also been noticeable things that we've been fortunate enough, I think, to pick up on lately that have been beneficial, right? Were a little concerning. So we'll talk about all that and probably more and maybe even too much. But this is the notes for the week. I'll leave that up there if you want to do the screen cap. I'll try to make sure I review them, all of those, by the time we wrap up. And then we'll try to move on to sector situation, because I really want to make sure this gets out in a timely fashion on Sunday. And as it's shaping up right now, that probably wouldn't be the case. So we're going to now do the old quick stop share, and I'll reposition, and we will get into the meat of things more. I can move some certain things out of the way, and let's get this up here and then start sharing. I'm just going to share my browser for starters on, let's see, screen 3. And I'm going to jump back to this part right here. So we haven't been checking this lately, but I'm just doing a few tabs this week. This is a sentiment survey. And one thing I probably should have mentioned last week was that we came into this week with a pretty high bullish reading. It was maybe well, certainly your best reading right since March 6th, but really those two readings, you've got to go back a ways to find anything better. So this was kind of like the second bump of bullishness, if you will, that we've seen recently, that was quite high, right above 50. And that's, to me, is something I wish I kind of knew, but just didn't get. I don't think I got it mentioned last week. But anyway, that's important to me because, again, that's a contrarian viewpoint, really, that's expressed by that sentiment survey data. And when you see the deterioration happening the way we did, we started to see some things, that were concerning, even though the markets were sort of, I guess, nominally making new highs. But there were some things, I think, a little beneath the surface. And one thing we said was that a few things were missing. There was a little bit of loss of this or that, but nothing really horrendous in terms of there was a massive discrepancy between the breadth underneath the market or anything along those lines. But we did note that transports were sort of a missing element, that IWM was a missing element. They were trying to go, and then this week they both had, I think they both backed off, right? So they kind of did maybe something along the lines of a mini false breakout. But one of the big things that we've been taking, I guess, odds with, or issues with, might be a better way to put it, is the whole idea that's being really recycled from 2023. 2023, it was going to be, right, that, oh, the Fed's going to halt and they might even be cutting sooner than later. That was the story that got really popular somewhere in the winter, mid to late winter of 23. And then that really came off the rails, because clearly that the rates did not stop going up, and that didn't stop. It took all the way, I think, until the fall for rates to stop going higher. And we've been sitting there, I think, ever since. I think maybe November is my recollection. And they've been trotting that out all over again. But as I've been noting in these overly long videos, the stuff that we've come across, that we've relied on in bull markets past and other times, that tends to be, in our view, more reliable with respect to future inflation, that was never really backing off to the extent that a lot of the bulls were selling. And so now that's really what's created some of the problems, or at least it's been the cover story for what's created some of the problems that we've seen this week. But now it's all but a certainty, according to the markets, that the early May meeting will not produce anything in terms of the movement of the target rate. But June has now become a lot more 50-50-ish if you look at this, right? So just a month ago, we were near a 60% chance that we were going to get a cut according to the markets. We were taking odds with that, but again, I would defer to them more than myself. This is certainly not anything I'm an expert in. Anyway, it's a lot more 50-50. So I feel like we've called the bluff of the market story that they've been promulgating for 2 years in a row. And I think we've been right, because they had rates even coming down sooner. So there's a good chance rates might not come down by June. There's a good chance it might take a little bit longer in the year for rates to start coming down. I think unless there's some sort of a really strong situation that develops in the market where it would just be almost like a panic rate cut. That could be financial system stuff. It could be really that there's sort of this revelation that a lot of these economic statistics have been overly massaged, even given the egregious overly massaged standards we're accustomed to, or lack thereof would be a better way to put that. Who knows? But it could be something like that, just banking system, geopolitical, things like that that would cause them to say, "Uh-oh, this could really seize up the economy. We better do something." So that certainly could happen. But as far as if you can't anticipate that, or you don't have anything to go on, and you're just looking at the realities and sort of the commentary that they've issued, there's really no reason that I can see that they should really be starting to cut as quickly as June as of right now. So we'll see, but just worth noting. And then finally, what I want to get to, what I was going to show really is that a few strong sectors have had some really just consistent paper in them since they really turned. And one of those was the energy sector. The energy sector had some really strong paper here and there. The thing is, the nature at which it advanced, it was so sort of relentless. It was more of a day by day sort of drip higher, even though that makes no sense. But I think it conveys the idea. There wasn't this really, really strong just zoom, right? So you really had to just stay with these things. There were many of them. And I just wanted to harp on that a little bit here, and also with XAU, because we were for the longest time, and especially in sector situation, just not willing to go along in a big way with these sectors because they just weren't showing us anything technically. And like I've said many times before, when the technicals start to shift, there can be a reason for that. And especially if it has staying power and sort of becomes really impulsive where there's a strong move, there's certainly usually reasons for that. It seems like a lot of people started picking up on that in the metals, and also not just precious metals, but commodities. There was uranium, basic materials were doing well for a long time, but certainly in precious metals, we finally started to see the paper when the technicals turned. Same thing for energy. So I was just going to show that because we talked about that in both weekend videos the last few months, and we talked about it today on our cocktail hour. So now let's really get into some of the comments and some of the charts, which is really our main focus. There were a lot of things that kind of exposed some of this data that came out this week that, again, it's getting more and more egregious. Just this jobs number they were celebrating today, there was the negative full-time job component to that, and then there was all part-time jobs. So if everyone's really going to celebrate that, right, that's not the kind of thing, right, that's ideal. Clearly, you really want to see higher quality full-time jobs being added, not not these part-time jobs, which is fine. It's just that obviously a lot of people prefer to have a good full-time job rather than having to work a series of part-time jobs that often don't pay as well. But anyway, let's get into this week. We'll start out with the spiders. I'll make sure I go through all the comments that I've got made. Some of them are just revised. Typical week where I leave some, add a little bit, refine them, hopefully. But we were looking at this, and you know what? I actually think I want to start out with semis because they're really my main focus. Because I think they're the main focus of the market. We were talking about how the semis in both videos, how the semis had a triangle that was forming in there, and you can see it better probably now. And so I just had noted, right, we could finally get a movement here, and it could be interesting, like one way or the other. And by the way, don't forget about false breakouts and false breakdowns. And so what they did at the start of the week was they had really a false breakout where they made it earlier in the session, and everything was going like gangbusters. They cleared out all the highs that were made on all these candles with this one little, this is the old, right, running of the stops. People that are short, they take all those highs out. People have their stops placed just a little bit beyond there often. And then, right, you deflate from there. Then, right, you come back into the triangle or very close to it. And then they play games really with dropping it below the triangle, reversing it, gapping it up, right, big time on Thursday, and then reversing it. And now today, right, they've gotten things off the lows to try to, I think, keep things from deteriorating further. But they ran into trouble when they hit one of our triangle lines, which I'll highlight here in blue. Hopefully you can see that. And then that was very close to the 20 SMA there in light blue as well. So it's having trouble with forms of resistance from the underside, which is the way that I look at it. So to me, right, that is a little concerning, to say the least, right, because a false breakout to the upside, another attempt to do the same thing. There's two really that have failed within this week. And now you're closer to the lows of the week than you are the highs, and you're below the most important of your short-term moving averages, the simple ones that a lot of people chart, which is to me is a legacy thing that I keep on my charts because I know historically a lot of people have used them. And the 20-day, you're below that is what I'm getting at. It's the 20-day. So you're below there, and your next big spot, I think, not that there can't be a little bit of flat line support here or there, or maybe some fibs that would be a retracement level. I'm just saying, if you look at this in a basic way, right now you're looking at the 50-day or near the 50-day, which is a way down. And so we've been charting it that way. And I think you have to keep your eyes on this because this really is the epicenter. So for what I think could happen in the market, and it's obviously been a leader. And if that starts to really create problems and they can't really key off that, oh, look, the leaders are leading and the leaders are struggling, that usually isn't a good sign. Not always, but usually isn't a good sign. So you've got to be concerned about that. And interestingly enough, right, there's a couple other things that may be worth noting for traders, which is that naturally this spills over obviously into the Qs, but all the indexes are really in a similar situation where they haven't broken down, and yet they've lost some of their positive complexions, right? Some of their positive complexions have been called into question. You've got this fall below the 20 here in the Qs. That's the light blue line, but you find support on the 50. And I think we literally were saying that, right? That the next area that's really a big deal probably for the Qs is the 50 because of how it was kind of coming into the picture. This was last week, of course, I'm talking about. So that trended to be, I think, the right way to look at it for now. It's holding in there, right? It is an expiration day. They've only got really a little bit more than a week to go, to really about 10 days, I'd say, roughly, give or take, before they start getting into the EPS. Remember, we noted last week that 7 of the S&P sectors of the 11 have had their EPS bar lowered so that it's much easier for them to claim victory, right? So if they manage to beat those lowered numbers, which is, part of the scam, but that's the perpetuates things. But remember, we've been talking about really the market losing its momentum, its swagger, its vigor lately. Now, as we noted last week, that's not the end of the world, because right, to have had the kind of run that it had and only pull back to this extent is really a win for the bulls. But you're within pretty close striking distance of problematic developments, right, beneath this week's low, which occurred as of now with about a half an hour remaining. Excuse me. It occurred on Thursday. So you've got to be concerned about that, because anything could, it's not going to be a big candle really to get back there. in terms of like you can't have it happen in one day without news. It could be back there just with yields rising a little bit more, right? It could really start to plague the market a little bit. So as of right now, that's been the story of the week. And I just want to note the Pavlovian response, where if you look at what happens in SMH, right, they every time that you got weak, the next day, almost really it didn't take long. But whenever you had, remember that this is a point, like I'm going to try to tie a couple things together here, but when you break down below something like you did here, right, on this particular day, I'll try to highlight right in there, right in that, on that candle right there where my cursor is. You were below the support in the triangle and threatening to come beneath and close below the 20-day. They managed to erase that. But notice right the next day, they just gap and they zoom things up. And so, and today really they were right, excuse me, they were right up with things. But so my point is that after any kind of a session where, excuse me, some allergies are getting me. After any kind of a session where something was punctured and fresh shorts could have been drawn in, they really just have almost like in a Pavlovian way, just jammed it back big time the other way, right? Where they pulled it off this way too, on Thursday. So it makes it really hard to be a bear, right? Even if you're right and we do get a sell off, you might have already been put through the ringer a lot, right? Unless you really just sat there and just said, I don't care, I'm going to absorb it. But if you could have tried to take some measures to mitigate what was happening, to maybe your short-term P&L, and you end up right by the end of the week that you're close to these lows. So just the point is that when you get into these things and you come down to some form of support, I said it last week, I'm trying to say it again, you've got to do something. You've got to maybe do what I call a quick trim, or you've got to do a quick roll of maybe some of the contracts you're holding, because these guys are really great at not letting it go and then really turning the tables. And I said it last week. The other thing is you have to remember that it's not just us that think that this market is due for a pullback, right? A lot of people know that this market's due for a pullback. A lot of people are trading it that way as a pullback. So every time this thing starts to show that it could be on the verge of breaking something, a lot of fresh shorts are drawn in there. And if you're part of that, that's fine. It's just that you've got to realize, again, that if they get it to support, you probably got to take some small profits, because there's a good chance the first time it's support, they're going to support at that point and reverse things. And then these days, jam things up instantly, quickly, right? And so then you're underwater. So you've got to be it's really tough. You've got to keep that stuff in mind if you are trading for a breakdown. And just remember that, right? I'm not alone. They're drawing other people in. They have a great track record of drawing people in and then quickly reversing it on them. That's why I've got to trade this way, where I take something off the table in terms of profit, because if it does, and I hold the rest, if I do hold the rest, I got to have some kind of a cushion, because before I get a chance to react, they might really have me underwater. So it's very, very tough, unless you're going to play a longer term waiting game because you really believe in it. And maybe you've got, I'm not getting out, for example, until I see this whole range closed above up in here. Then I'll believe that the threat of a correction has passed. Okay, that's fine. But you have a lot to live through, but there's nothing wrong with handling it that way. Just trying to include some things I think that might be helpful to some folks. But as you saw with Qs, we'll go back and review those. The Qs, they're in an interesting area because they're below the 20 and above the 50, right? And so you really have to wait at this point for them to tell you what to do next, right? Do I want to be someone who says, well, it's pulled back 2% from the high, found support on a critical moving average of the 50 SMA, it bounced from there, and I now believe that it's going to take a run for the highs and go. I'm not in that camp yet, because it's clearly struggling right at the 20 SMA now in light blue today to get above there. And I think that I'd rather wait. I'd rather wait for them to start to try to break things out on Monday at this point and go with them, and saying, okay, that they did it. They pulled off the test of the 50. now they're trying to run. But you don't know what kind of news the weekend will bring. We don't know what yields will be doing on Monday morning. I'd rather wait at this point unless I see really something really dramatic change my mind in the last 25 minutes of today's trading. I'd rather of the session. I'd rather see some kind of new information or data or what have you change my mind. But for now, I'd be just as content to say, look, I'll come in and start fresh on Monday, right? We'll see what the weekend brings. So that's where I would be. I mean, breaking down below Thursday's low, probably taking out. You would have to probably take out at least maybe Wednesday's high there for me to say, okay, they've got it on its way back up. There probably would be a driver for that. I can't tell you what that would be now. Obviously, it would have to be something that developed that I think that has a chance to give some legs to a little pop and maybe challenging of the highs. Now, remember, there's a lot of things that these guys end up doing that will leave you scratching your head. If you say to yourself, well, wait a minute, how could they move things back up 2%, really right to the all-time high when clearly, right, yields are not cooperating with them, right? The inflation going away argument is on the ropes a little bit right now. Not entirely, but it's on the ropes a little bit. Yields coming down sooner than later. It's on the ropes. That's if you hold on and you decide not to do anything, hedge yourself, pause with some techniques, close out. They could literally create a new all-time high, and you'd be left scratching your head. How's this even possible? Why weren't they at highs when yields were lower? Why weren't we, now that yields keep moving up? How are they doing this? They can and do, right? I would just say I wouldn't think that way, even if you think you're right. And I tend to think like that does make sense, right? But this is what they feed on, right? For people, they're people that are willing to sit there and get run over and while scratching their head while these guys are moving the price action in a certain way. So remember, it doesn't have to make sense, and it often doesn't. And that's why the timing of corrective activity is so hard. Remember, they're not too far away from the EPS, which they could use as short fuel, right? That could be propellant to create another squeeze. And they also have very easy financial conditions that are still in place to this day. This is the wind at this market's back, right? So in the face of everything, as they say, of all things good, of all things holy, these guys could still pull this off. So I wouldn't get too comfortable as a bear either, even though I think it's right for me as the person trying to record the videos to note that there are some concerning signs. It just, you've got to be smart about what you do when you're at these kind of things are very tough to time perfectly. And if you overstay your welcome, they can really make you pay. That's what I'm worried about. I don't want anyone who's starting to think more of a bear, which I think you should, not realize that no, this is just as dangerous to the upside, right? So remember, it might be more dangerous right now, because one thing we have to mention is what we've gone nowhere now for about 2 weeks of trading, right? You're not really all that much different than you were. Let's pick out something. This high on, it looks like 3.8. So a month later, right, compared to that high, you're just about where you were 1 month later. If you took a snapshot at the high of that day. So really, you flatline for a month, which has done what? Let's look at the RSI reading on the SPY, right? And the RSI reading now on the daily chart is not on this particular one. I thought I had that down there. Oh, my bad. I have to go give everyone another look here. Sorry about that. I thought that was on that view. I must have done something to it, but it doesn't matter. We'll just use this one. And you've got a 55, 56 RSI reading. So, right, they're no longer overbought, right? There's no way we can argue, the market's still really overbought on the daily chart, at least it isn't, right? So they've done enough sideways churning and they haven't really given much back. So we'd have to argue the bull side there. Like if I'm a bull, excuse me, I love the idea that I rally almost relentlessly for 5 months, and then the most I give back is that much from the high. I give back 2%. That's it. I mean, you're typically you're going to say that's really great. That's strong, and it is. So don't get too drawn in mentally is what I'm trying to convey. Make sure that you are willing to keep this the way a trader should and be ready to trade it, just on your rules, not on, hey, this thing's really ready to crack here. It could. I'm not saying it won't. I'm just saying you've got to trade it. Just handle it professionally, right? Handle it as coldly as you can. Don't let your thoughts get the better of you there in terms of, well, how could this even be possibly going up with rates moving up too? I've seen them do it. I've seen them do it for long periods. They've done it really this year. Rates have moved back up. The TNX has moved back up this year as the markets continue to go. So usually they were at odds with each other, right, for the longest time, but we're not, and it is to a degree, but as of right now, they're both kind of moving up, and one of them clearly might have things wrong. But they've held this thing above the 20 for now in SPY. You're basically sticking with the same thing. You're going to stick with Thursday's low, probably Wednesday's high would be my number. And you start getting above there, I'd be willing to go with it if you, especially right, if there's news supporting it and yields are backing off and dollars backing off and things like that. Diamonds we'll take a look at. And right, it's almost the same thing everywhere you go. So Thursday's low, that's where we would probably be willing to say, let's take a shot here. Let's see if we can get a real breakdown. There's obviously other things you should be looking at during the day. I can't go into all those in this video, but probably the 10-day is your number. If you want to be aggressive, if you want to just wait, it looks like Thursday, you could wait till Thursday's high to start going with the long side again and just saying, look, the reason I'm saying that is you have to treat this as this pulled in a lot of shorts. Some of them may be trying to hold on and expecting there to be more breakdown. But every time, right, they've used the 20 in a similar way. They got people worried, they take it up. They get people worried here, they take it up. They get people worried for a few days, they take it up. They get people worried again, they take it up. This is exactly what happens in uptrends. So now that the 50 is probably even more widely followed and considered more, or at least considered to be, or as widely followed and considered to be slightly more important in its heft or weight in terms of the performance. So something dipping below the 50, big deal. Oh no, the Dow's below its 50-day. So that'll get some people juiced up, but you have to be, especially right the first time through, and this is the first time through the 50 in months, right? So especially right going to the downside of the 50. So you've got to be concerned about that because it's basically a very well advertised breakdown, and it could certainly break down if the news breaks that way and yields do continue to move higher. Speaking of which, we'll chart that just to show how they've moved up this year. And right in the 10-year anyway, generally moved up this year, and the market has as well. So that's not always the case. So the yields haven't been buying the story that many of these prominent bulls have been selling to this point, and they're looking a little concerning to me if I'm an equities bull, with the way that they've managed to retake all the SMAs, and some of them are starting to upslope, and this thing's really not far away from Wednesday's high, which would open up new potential upside territory for it. So you've got to be, I think, keeping this on your radar for sure. So it's getting a little bit dicey here, but getting back to the actual equities. So the Dow, to me, right, we already talked about that, the levels that you would look towards, really Thursday's low, probably 10-day in there, and this probably here. This has been, right, we talked about this, did quite well. There was a decent little trade in there, but with yields, this really shouldn't be surprising the way we talk about it each week. With yields doing what they did this week, and moving up generally, right, from where they closed last week, you have the lower, smaller caps, right, having a rougher go of it this week. And they too are also between the 20 and the 50. So virtually everything is between the 20 and the 50 at this point. But the trend, we have to be honest and say the trend is still intact because this high is the highest of any high here. And then this low, right, is now currently higher than this low. And you have a rising 50 there in gold. So again, you have to really wait to, I think, to really say I'm trading the breakout or breakdown, you've got to wait it out. And probably here, if you want to get aggressive, it's the same thing. You could use the 10 SMA at 206.25. And then if it breaks through, right, you could be on your way. But more than likely, I would think if that's really happening, that you'd be looking at the TNX rolling over. It would be maybe some other news that gets made by a Fed speaker or something along those lines that sends yields rolling over. But you can see right here's the big put. Look where we were last Friday in the 10-year. Big push higher and through virtually all SMAs on Monday. You did the old kind of back and fill a little bit there. They find support here on the rust colored 150 SMA, which is the highest of them all, and it's holding there. It's going to put it together the highest close of the week, it looks like, too, right now. So I don't think that's going out in a way that's really wonderful for the equity market, but it's only one day, right? You don't want to read too much into it. We'll see really what it does overall next week. But yeah, I mean, that just continues to turn the technical tide for itself. I mean, I think things continue to shape up more bullishly there on balance. So it's been a tough little number in terms of it won't rocket, but it won't fall. So it's been another grinder. So in a way, right, a lot of what we've seen with grinding it out, moving higher, slowly but surely, a lot of that makes sense, I guess, when you relate it all back to interest rates, which everything theoretically sort of relates back to interest rates, at least in theory. Where are we on? Okay, so what I also wanted to cover, I added is this week, just in our notes, is I'll cover the couple futures. We'll probably end up doing these in sector situation as well. But look, these things have been strong, right? Here's your light sweet crude, right? You can see what that's done. This has been, powerhousing. Those stocks have been powerhousing along with it. Again, it hasn't been rocket ship material like on any one session, but it's just the relentlessness of the move higher. The XLE is, and some of the stocks that we've been able to fish out of UA in there, they just continue to act well, right? It's just a very, very strong, relentless move up. So that's energy. The same thing with copper. We've been keeping an eye on copper in sector situation, but I'm going to bring it up now just because obviously it's an important commodity. It's used in a lot of things. They call it Dr. Copper. That's looking better, right? So as well, I mean, that's doing well. It really broke out of this. We talked about it, broke out of a consolidation finally and started to put higher high, higher low together. So it's really powered up, right? So that's, in a way, that's a good thing. But at the same time, right, more commodities are getting more expensive. And then finally, let's take a look at we'll take a look at gold, which is another thing that's getting more expensive in dollar terms. I say, let's see if it comes through here for us. Wow, taking a long time to populate for some reason. But you can see, right, just I think this might be the all-time, you might be like at all-time highs on this stuff. And I don't know how far these continuous futures go back, so I don't want to overstate things, but I might not be able to get data for that. Let's see what comes up. Yeah, and remember, we talked about this multi-year sort of cup and handle. We talked about this back in the fall when it started to sort of look like it might start coming out of that in September, started to come out of there, October, right? And so that cup and handle is very prominent there. And we talked about how, if that pattern fires, it's a big deal. It's a really long standing pattern that's been tracing out for, well, I guess you'd have to say over over a dozen years or nearly a dozen years at this point. That's quite a long-term pattern there on the monthly chart. Silver, maybe not as stellar as gold. It often is a laggard relative to gold in my experience. But we'll see how it looks on the big picture then on the small picture. But we did, yeah. So you got to go back further. I should probably get away from the future to show you more data on just SLV. Maybe it will be better than SIL. But I was just going to the futures to show really what's been happening. And this has just been another one that's just been relentless, where they just I look up and I feel like lately this week I've been adding a lot of potential longs that are just short term overbought, and it's hard to not add them when you see the big picture, but you can see how strong silver has been. Let's go to SLV to get more of a long term look at it, but I've added a lot of names, and like I said, in sector situation, we noticed that they finally started to see more positive complexions in the charts a few months ago, and ever since then, it's really been good. It's not been great though, in my opinion. I've seen stronger phases, but there's really been nice lifts by a lot of names. But this is, hopefully you'll be able to see this cup and handle that was also in here, and I think you can. I think those lines are kind of on that on along the handle here. You can sort of see what we're referring to though, and just spotting these. And this is why I was really sort of like pounding the table, not to buy them then, but to keep your eye on them if they do start to improve on the charts, because if you can latch onto something and look at this, my experience has been cup and handle patterns are very reliable, and they deliver very well. In other words, they fire a lot of the time, and when they do fire, the eventual movement they deliver is very good. That's anecdotal though. I don't have any statistics or whatever to be able to share on that, but that's just a couple things I thought I would be worth delving into. Let's get the notes back here, and let's talk about things to make sure we've got most stuff covered. I do think we covered mostly everything that we normally covered. The VIX, I'll let go. It's not like we need to really chart that. Just know that the VIX, of course, had a good week with the market getting clobbered really yesterday and having some trouble earlier in the week on Tuesday. That did perk up the VIX. The VIX is managing to stay perked here almost all the way through the bell. So that's pretty good for the VIX, because it's really had a rough go of it for a while. We did note a few weeks back that we did finally see some major VIX activity on the call side, right? I think it went out to June. So someone was anticipating something. Maybe they're expecting more out of the VIX. We also saw a lot of IWM and SPY activity this week as well. So that was also interesting, that there was a lot of, it looked like a lot of hedging going on in both of those. So that's worth sharing. Let's see here. So yeah, so I'm calling it is time. In other words, like if you're on the verge of a breakdown of greater significance, remember that everybody else sees this too. And remember that the gang knows this as well. And the gang is prepared to do what the gang needs to do to come out on top. So just remember, if you join the downside party, and I'm not trying to say you shouldn't, I'm just saying if you do, be smart about how you enter and how you manage, right? Like you may want to overbuy. That way, if you liquidate more than you normally would at the first support that it falls to, if you do get a breakdown, that'll cushion you a little bit more than you normally would be cushioned if they try to turn and burn and reverse it back up in your face. Okay. Also know that they're great at creating false breakdowns, and that they do not really wait around very long to move markets up dramatically. All you have to do is witness what they did today after Thursday's super swoon, right? Late in the afternoon, they have just came back from this market like gangbusters. So if you waited for more, and then hesitated and said, I'm going to give the market time to fall a little further, they really took a lot of your gains away from you. This is, if you look intraday at the Qs, for example, just look at the 15-minute chart of the Qs and on Thursday and Friday, and you'll see exactly what I'm talking about. This is very common, and that's why I almost always mention it, because I don't want to see people with the right idea just get wrecked. The Mag 7 themselves are also flirting with support. That's key, just like right the at QQQ. We definitely took a turn for the concerning. All the major index ETFs are concerning. As we noted last week, it was worthy to mention these things. Rarely gets too much better. It didn't, right? Most sectors pulled back this week. Several were near highs, but the market was acting tired. We noted that last week. The breadth rolled over this week, right? So there were little things you could point out. It got a little bit worse, but I still don't think that market breadth that I look at is anything disastrous myself. I mean, there could be something that turns into something far worse. I'm not saying that. It's just that I don't see this big dislocation to the downside based upon what I see with the market breadth indicators. We did note that momentum has been ebbing. That was worth noting. It turned out VIX shot up this week. We noted that TNX did, but it did pull back a little bit, right? However, it did after pulling back, it did reverse back up, and it will apparently close at the highs for the week. So that's interesting. Dollar retreated. The trends overall held in the market, right? Where we can't say that, oh, they broke the trend, because they were able to avoid a rough session here today. It was overall, I think you're going to end up with a pretty positive session that keeps things from breaking. But we are under pressure, and the proximity of where things could get dicey is close. So again, that's why I'm going for it is time, because this is a time when it could happen when you're this close to a breakdown. And if they failed, in other words, if they fail to rally and you're right back under pressure, that's definitely not a good sign. You probably do start getting a breakdown. It just becomes how you handle it, right? You've got to be smart. I keep reiterating that because I don't want to see people, get smoked on that. It's just so easy to get smoked when you're fighting against a bullish trend, when there's a lot of money sloshing around out there like there is right now. Anyway, I still have maintained, I think we're in the latter innings. I've been saying that probably for 6 weeks. So I was probably a little early on trying to make sure everyone was ready for something that could happen. But again, we didn't fight against it because we knew the trend hadn't cracked in any meaningful way. So we were still willing to go along with it. We were just keeping one eye out the exit door. The DEF CON, I still think you should be elevated on DEF CON. It's the fresh shorts. They got them again a couple times this week, but the rate cut fantasies are challenged all over again. I said part two, but it is. I mean, it's the same. It's the same but different than last year. The same old story. They put something out, the press runs with it. It's way ahead of reality, and then the reality keeps throwing cold water on it. But unfortunately, it's the same thing with the jobs reports and all this stuff. When you look inside a lot of what these uncharitably call them clowns are reporting, it's not true, right? It's just headline stuff. I was really disappointed to see Mohammed El-Arian talk about how everything's wonderful in some comments that got put on Twitter, when if you look inside this employment data, it's not that wonderful. It's all part-time. It's entirely part-time. Anyway, that's who cares about that when financial conditions are easy. Inflation remains undead. That's me trying to be slick there, but it just does. I don't think it's over yet. Let's see. The Fed speakers and data injected some doubt, just to be clear, as to what caused the TNX to move up and stocks to sell off. Remember, the election year cycle is looking like at least it was worthy of checking out again, because it did warn us that late March into April tends to be a little problematic historically in the fourth year of the presidential election cycle. And so far, that's definitely been worth paying attention to. I don't know if it materializes or metastasizes into more. Maybe it will. I still think that, right, you still look very promising, big picture. until something cracks. So we have to call it that way. Even if you think this is a lot of hogwash, the whole market, and you have all good reasons, you may be right. But until we see really signs of market deterioration, breaking of certain key technical levels, retracements that are not normally part of a bullish story where you get really deep retracements, you have to still say and look at it. Well, the trend is still intact. They only maybe retrace whatever 23% of the trend or something like that. That's not that bad. It's actually quite bullish. They hold there and continue to go higher. It's an election year, all that kind of stuff. So let's see. Anyway, yep. So right now we're getting really close to the Q1 EPS coming out. That could be something, right, that they use. Again, just like they use the story to take the market down, they will have a story probably to take it right back up if they on earnings, if that's the plan or it becomes the plan. Let's see. So remember, the bars were lowered, so it shouldn't be as hard as it would be. We noted that for the past couple of weeks. IWM, XTN, both of them took it on the chin this week. So those are dashed for nail. As we said, right, rarely gets too much better. That was one of our things last week. And that's whenever you realize that that's it, or you agree, if I say it and you agree with it, just remember, you got to be on guard, because just like we talked about SMH, I think when we put our SMH graphics out in Rebel Pit, I think that's the high as of right now. In other words, like when we saw that we were at the 100th percentile in terms of stretch from the 100 SMA, and I think almost from the 200 SMA, we knew that there's no rule that says it can't get better. It's just that, right, you don't really get much better very often. When you look back over 7 years of data and you've never been more stretched, that's just telling you, right, it's a little too good. That's all it really is. So I always pay attention to things like that, because usually when it gets that good, it doesn't last very long. And usually when it gets really, really, really bad, it doesn't last that long. You've got to act quickly if you're someone that wants to be a first inning entrant, right? You really got to be. That's when it's the most dangerous to enter, and also the most rewarding, though, because if you get it right, you bought it at really ideal, or sold at ideal times. But very, very, very difficult to do consistently, at least for me. The Monday and Friday rips that we saw this week, right? They were both assisted by shorts, right? So remember, fresh shorts have been drawn in. Fresh shorts didn't like the action they saw this week. Fresh shorts are poo-pooing today's move back up. So the hedgies, again, are a lot of what we're referring to, and they are silver plating themselves. It's almost becoming Pavlovian whenever there's anything that turns out to be a bearish day of any significance. It's almost immediately reversed, right, the next session. So just reiterating that tip, that when you first reach support, if you do trade against this trend, which again, I wouldn't dissuade you from doing at this point, because there are some signs that you could be cracking. You've got to wait for what you believe to be there's a real crack. And B, I would definitely be a quick trimmer or a quick roller, because usually when they reach a support level for the first time, they do hold and reverse it. It has to really have a story behind it that's material to really push through, like it's butter, hot knife through butter. That normally doesn't happen. So unless you've got something really strong to work with, the whole message is don't push your luck at the first support. Be disciplined, do something. And look, if you buy 10 puts and you sell 2 at your first target and make some money on them, and then the thing falls to pieces, you can come blame me over a celebratory libation at some point in the future that you only crushed it on 8 of your 10, because a lot of times you'll be happy you did that. So we can always talk about that later. But anyway, I still think I've seen some distribution late, but I did note this earlier. EPS calendar and the money that's in this economy, right? It's really set up for them to keep going. So that's why I said early April, along with the presidential election cycle, is when we should see the kind of pullback that doesn't have to be a crash, just some kind of a pullback more than 2%. we'll see. Next week should really be the week that they try to do that if they're going to. And if they don't, then I don't know why. I don't know why with the earnings bar lowered, the on 7 of 11 sectors that they'd start falling apart during earnings. It would have to be probably forward guidance they don't like hearing from CEOs that would ruin the party. But what could also ruin the party would be rising yields for whatever reason. They just keep going, and we start the trend is up in TNX too. So that's the trend there. So something's got to give at some point. I still think the banking system is not out of the woods. I talked about how really all those commodities mooned. The geopol, obviously, that can definitely be a source of problems. That's probably getting up to a high percentile where that should actually start delivering things. There hasn't been anything in such a long time that's really rattled the market. It's almost like it's due for that type of thing, if you know what I mean. I think that we have the problems, risk returns in a significant way between now really and the end of the month. That's been my contention. I had to be early in my warnings that it could happen in really the second half of March. Didn't know if it would. You just never know. But I still think if they're going to have problems, it's going to start in this month. I would just fine tune your butterflies to the downside in case you are interested in either using them as a hedge or actually using them offensively to do well with them, especially if you're willing to be someone that morphs them the right way and you get super aggressive at the right time. It's a whole nother discussion. Anyway, I have risk elevated. You've got your downside gaps that have been unfilled for a very long time. There's been a lack of a real pullback here. The market definitely is in imminent danger if this week's lows give way, which would be last week if I were recording this on Sunday, like I normally do. Blah, 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 blah. What else do we got? Oh, yeah. So I'm not giving up on the market bullishly in terms of because of the trend and the fact that the pullback has been so mild so far. And if it only pulls back, a little bit, like 2 to 3 more%, and they hold it there, right, and they start back up, why would I? Right, I'm a chart person, so I'm going to stick with that. If the trend remains intact, you could say, well, what if they bounce from there and they put in a lower high? Well, if that were the case, then I maybe would be changing my tune and say, we got to see how this unfolds. But the predominant trend right now has been bullish for the last 5+ months. So until that gets cracked, we have to keep sticking with it. I still, having said that, would be mentally prepared to trade the downside, given the way things are shaping up, the loss of momentum, and how close we are to a key breakdown. Just remember that, right, these guys are great at using news. They're great at using very obvious breakdown levels, like just below the 20, just below the 50, like we're looking at, to frustrate aggressive shorts. And that's why I've been harping on don't get steamrolled by overstaying your welcome as a bear. Remember, you can always get back in, right? So if you take profits and then they put a very poor bounce together and the thing rolls over again and you like the technical setup, there's nothing that's stopping you from getting back in and trading the downside. So a lot of reminders, maybe too many, but I just really hope that everybody handles all this stuff the right way. Should that downside tempt you to get in, it should we see some weakness. If we don't see weakness, you all know the levels where I would be ready to trade on the long side. I just think you're in a dicey market, and as long as you keep your eyes on the TNX and the dollar and the VIX, if those are not giving way and they're kind of working their way back up, you've got to be a little concerned that the market is bullish market, and that point would be on a little bit of like shaky footing. It might be working at the moment, but I'd feel a lot better about it if all three of those things were on their way down rather than working their way up still, right? If they're in retreat mode, yeah, I'm definitely going to feel a lot better. But if they're moving higher, I'm going to be a little worried, and once again, even more disciplined in how I manage my position. So I hope that something I've covered here in this video helps you out in this upcoming week or some week in the future. I want to thank everyone for tuning in as always, and I want to wish everyone a great weekend and a great week ahead. Had to get this done because I've got my plate full with some stuff happening this weekend. So everyone take care, and I'll be in touch through the normal channels next week. Thanks.